Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into LifeVantage's latest quarterly report. And let me tell you, it's a mix of good news and some head scratchers. Think of it like this. They're selling more stuff, but are they actually making more money? Stay tuned, we'll see paired before we get started. If you like clear insights from complex company reports, hit subscribe. Also, join our awesome Discord community. The link is in the description below. LifeVantage in its Form 10Q filed for the quarter ended March 31, 2025. Highlights its focus on nutrigenomics, studying how nutrition affects our genes to boost health. They're selling these products in the United States, Mexico, Japan, and many other countries. Now, before we get into the exciting part, let's mention that LifeVantage, like any business, faces legal claims and investigations. It's tough to know exactly how these things will turn out, and management regularly checks to make sure things are as accurate as possible. Let's get to the numbers now, starting with a quick snapshot of their financial health. Their cash and cash equivalents increased to about $22.5 million, a solid jump from the $16.9 million your wallet they had back in June of last year. It's like finding extra money in your wallet. They also significantly increased their inventory from $15 million, increased their inventory from $15 million to $22 million increased, but nothing tall. On the other side of the balance sheet, the equipment decreased from $7 $8 million to $6-7 million. All other assets and liabilities are about the same as last year, so we won't mention those for now. Now, on the liability side, we see accounts payable increased from $5.8 million to $7 million, and the all-important accumulated deficit reduced by about $5 million, which is better than having a bigger loss. Let's see how those extra sales translated into real cash. For the past 3 months, they raked in about $58 million in revenue, which is a sizable jump from $22 million for the same period last year. Over the 9 months ending in March, their revenue was roughly $123.4 million. From last year, they also kept their costs of sales almost the same, a slight increase from $10.22 to $11.15. $211.1 from last year. They also kept their costs of sales almost the same, a slight increase from 10 to 11.1 million Denian, implying better gross profit. Of course, those extra sales also meant higher commission payouts to their sales force, which jumped from $19.7 to $16.4 1-ton 7 general and administrative costs increased from $16.4 and $16.4 to $17 million. After taking care of all costs, their operating income jumped from $1.9 million to $4 million, and after accounting for other expenses such as interest, their net income for the last 3 months came out to $3.44 million versus $1.6 million for the same period last year, so roughly double. In other words, their earnings per share also doubled, going from 13 cents to 26.28 cents per share for both basic and diluted respectively. Finally, in terms of other comprehensive income or loss, they had about $258K worth of gains versus $529K in losses. Looking at the bigger picture, for the 9 months ended in March, their net income was $7.8 million versus $1.6 million. That is a huge jump in income overall, and their net income per share was roughly 60 to 64 cents per share. Moving on to the statement of stockholder equity, we can see the additional paid-in capital increasing as employees are compensated. Also, we can see that the deficit is decreasing as income is generated. Now let's check the sources of cash flow from operations. Cash flow from operations resulted in a positive $10.8 million versus $9.6 million. Although net income was a large positive number, there was about $2.6 million in deferred income taxes that decreased cash flow, as well as $7 million increase in inventory, which implies a bullish outlook on future sales. The investing activities used about $1.1 million in purchasing equipment. As for the financing side, there was about $1.1 million used to repurchase company stock and $1.5 million used to pay cash dividends. Finally, the effect from foreign currencies added roughly $262K to their cash flow. Overall, this led to a cash increase of $5.6 million, reaching a total of $22.4 million as of March. Cash paid for interest and income taxes totaled $1,000 and $3.6 million respectively. Here's the geographical breakdown of where LifeVantage is making bank. The Americas are the main source of revenue with $48.2 million, which is then followed by Asia Pacific and Europe with $10.2 million. But the America is growing way faster with a 30% increase, whereas Asia and Europe is decreasing in revenue by 7%. Breaking it down even further, the United States is the most significant geographic market, bringing in $46.4 million. After that, Japan is next, with about $6.2 million in revenue and is barely growing compared to other segments. And in terms of geographical assets, it's about $20 million in the US and $1.8 million in Japan. Lastly, there were some updates to accounting rules on segment reporting, which expand how management uses measures to assess performance. They will also need to disclose income taxes that have been disaggregated and broken down, as well as some income statement expenses. LifeVantage is currently figuring out how these changes will affect their future financial reports. Let's take a peek at their debt situation to see if they are drowning in it. Well, for one, they have a revolving line of credit of $5 million with Bank of America. As of March, they haven't tapped into it, which is good news. Now, a quick view of what is happening with equity. As of March 31, 2025, about 5.1 million shares have been issued for incentive plans. Also, for anyone thinking of getting in on their revolving credit, just know that it has an interest rate of 6.41%. It seems they were in compliance with all financial requirements and they have not borrowed anything as of March 31. Finally, like before, LifeVantage is dealing with ongoing legal stuff, but they don't think it will seriously mess with their business. Alright, that was the report. So what can we take away from all these numbers? LifeVantage looks like they're on a growth spurt fueled by that new Mindbody LP1 system. It's like they found a new hit record and sales are jumping, especially in the US at 10. They're shifting their Asia to Pacific and Europe markets are slowing down and they need to figure out how to get these areas back on track. So the company is in a solid direction and doesn't have a ton of debt. Alright, that's our breakdown of LifeVantage's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also, join our awesome Discord community in the description. Thanks for watching. See you next time.